One. Madam Speaker, ladies and gentlemen, something quite important that I think many of the teams missed is really talking about what foreign reserves are for and why they exist. Because this debate is not about whether we should invest in general or in a vacuum in foreign entities. It's uniquely about the role of central banks and specifically their account of foreign reserves and why a significant amount, if ever, should be spent overseas. Foreign reserves are meant for emergency purposes. Things like economic crisis and turmoil, like what we saw in 2008 and what we saw after the pandemic, instances of war, like what we saw with Russia and Ukraine, or in instances of escalating conflict in the Middle East, and in times of pandemic, like what we saw during COVID. That is to say that the reason why they invest right now in primarily safe asset classes like currencies, bonds, and gold is because they need to be able to stabilize their own domestic or local country in instances where bad things happen outside in order to prevent contagion. Because we live in a world where things are volatile and individual central banks have the responsibility and duty because of their government to protect the average citizen. I broadly agree with opening government on their definition of where these reserves are placed, but I don't necessarily know why it should really be a significant amount. Because my point of information to PM earlier suggests that, yeah, we can do this, we can capture your upside, but I don't really understand why it should be a significant amount, 50% or more, or whatever would constitute a lot. The next thing is that I also don't necessarily know why it's so concentrated in the United States, because my point of information to Deputy Prime Minister was important because it suggested that we're already seeing a trend of de-dollarization, which means that since the United States did what they did over the past few years, getting into a lot of conflict like with Israel, Ukraine, and as of late with Maduro and Venezuela, they started to continue and sell their US Treasury or US bonds and even the reserves of the US dollar and started to hedge or spread out their position by buying the Chinese yuan, the Russian ruble, and the euros. Take note, all these investments are diversifying in other countries, but uniquely through the asset class of a currency as opposed to a stock. That will be important later, I promise. That's going to be important. So, opening opposition, on the other hand, they kind of jump and bite opening government frame and jump the impact. I'll take you later. They jump the impact of saying, yo, we want autonomy, we don't want too much foreign control, but they for real miss the analysis and missing links I'm going to bring you. I'll take you in a bit. Or fine, I'll take you now before my extension. Go for it. Yeah. Three.
Problem isn't de-dollarization or necessarily moving to other currencies. The problem is foreign influence from foreign governments. You much rather own something by private corporations that don't have influence over governments.
Yeah, that's what your president and Department of Foreign Affairs is for, right? I think the worst thing that you can do is politicize your central bank, like what happens in a lot of places in the Middle East and Latin America and even in some parts of Asia, that lead them to being a tool of the government to continue printing money and at worst put them in a system of hyperinflation or stagflation where there's no economic growth. Extension's very simple. 3 winning pushes from closing opposition. Number 1, foreign reserves are reserves for a reason, and they shouldn't disproportionately spread out too much risk in assets which are riskier, like stocks, even if they're foreign denominated offshore. Number 2, let's examine the role of central banks because, and this is a direct response to opening government, central banks are not hedge funds or speculators. They are in the business of controlling your economy and making sure things work out. And then the thirdly is I'm going to do an asset class examination and talk about the risk-reward matrix or curve and why even the best stocks which are foreign denominated are far too risky, hence a defense of status quo. Firstly, let's talk about what these things are for and what really happens. Central banks are meant to control the liquidity or amount of money in an economy through the levers of interest rates, reserve requirements, which is a fancy way of saying how little or how much money should a bank have overnight when they're able to influence how much that's going to be, and open market operations, or something I POI'd the Prime Minister, which is a fancy way of saying they're the buyer and seller of last resort when shit happens. They do things like direct stimulus and dole outs to people when you have crisis, and they also bail out industries like what we saw in 2008 with some large banks and recently with the Silicon Valley Investment Bank post-COVID. That is to say, these particular foreign entities need to be able to have enough money, which is why on our comparative, a defense of status quo, bonds or US treasuries and notes, other currencies like the US dollar and even other diversified baskets, and gold is winning on three clear metrics. A, it's a bigger and more liquid market, which means that it's easier to sell. And sure, you can sell these foreign stocks, but the stock market is likely to get hit first when you have economic crisis. B, it's just fundamentally less volatile compared to these other asset classes. The intuition being, there must be a reason right now, especially in our economy, it's skewed to the status quo investment mix. And thirdly, things like gold and silver and other precious commodities are considered a safe haven instrument. Second thing, right? The nature of risk and reward, and this is a response to opening government, is that their claim was, yo bro, bond yields are too slow, it's too concentrated in the United States, and we need to be able to diversify outside that. That's not what they're for, right? Central banks, as I mentioned in my speech, it's really meant to be able to protect your domestic economy. Nor is it what closing government asserts, like wanting them to be a tool of public influence, etc. Uniquely, central banks are meant to be able to protect their own home country, and there are other mechanisms and other institutions like hedge funds, foreign direct investment firms, and even your own government to be able to structure deals elsewhere to achieve the end impacts that side proposition wants. Ultimately, on closing opposition, we want to err on the side of risk and we want to be able to prevent contagion from spreading in instances where you have war, pandemics, or global crises. We are very proud to stand on side negative. Thank you.